Good morning. Happy Thanksgiving. Today's date, 11/22/2012. We want everyone to sit down, enjoy their families today. What we're going to do is simply give you a quick, brief update. The weekly moving averages are in play of the calendar year. It was a year ago that markets were at their very bottoms as well in November and December. This is the strongest 2 months. What I am going to tell people about the Dow, which I have here, and I'm also going to flip back over here to the S&P, which is right here. So we're going to cover the correlations between what the S&P and the Dow looks like. So with the Dow Jones in its corrections, we're going to focus first here what this means. This is a support level. This is a 50-week moving average. The 10-week is rolling over. We have the fiscal cliff. This is the time of year where stocks and things are going to go higher. However, 2012 is starting to end up in a bad way for the bulls. The bull trend that we experienced through the summertime has diminished considerably. The 50-week moving average will play its role at support level here on the S&P. Once again, one of the key factors that we would like to also highlight is where the S&P 500 daily is back above the 200-day simple moving average. This is a relief rally called a holiday relief rally. We were deeply short-term oversold. When the election went down, everybody sold. Tax consequences are forward-looking. As to how it all plays out, we'll see if the lawmakers can come to their senses and do the right thing for the American public moving forward and small businesses. What we are going to talk about is how this deeply oversold relief balance into resistance levels, we will be selling short into that. Granted that December is supposed to be one of the best calendar months of the year, however, with the amount of uncertainty and people don't know where they're going, we're having extreme problems with the broader markets, meaning that when the 10 week starts to go over the 20 week, that's called a weekly crossover, everything will be sold into resistance until we have a closing 4 week closing above this blue line and it's flattened out. The bear trend off of the bottom will remain in play. If we have a weekly sell signal, the S&P will go down much further. We will be looking at various different options that we trade on the S&P 500. We have them here. We have things that we look at a 1350 put. These are monthly expirations for December. The open interest, as we can see, is 152,000 contracts at the 1350 strike. That's a lot of put buying. We also have on the S&P the 1375 put, and we will be looking at making these transactions here. They have 97,000 open interests in total. Here is the $1,400 put that was down during the relief rally. We will be looking at this one. There are 230,000 open interest. That means there's 230,000 contracts that they're put options, because if the S&P continues to go down, then these will go up in value. We will definitely be looking at that put structure based on the S&P coming up and testing that wall of resistance where we would make those transactions. Once again, it is a very special day. 2013 is not going to be what people think. And the problem for 2013 is that we feel that if you're in the marketplace, you're going to need a 2013 guide, no matter what. And you've probably been down lots of various different programs, probably weren't satisfied either. That's okay. You will be satisfied here. We know what we're doing. We were deeply oversold. This is the two best calendar months of the year. The markets are coiled for a rally to go back up and test resistance levels if there is a fiscal cliff resolution. Once again, the Dow Jones is in very bad territory as well. This is the daily chart. We said that we were going to get a rally up, and we have. Now that we have rallied up, the call side has gotten a lift. The call side of the market, the call and put ratio on the S&P 500 index. We are masters at trading index options. When things are good, we like to buy calls. When things are bad, we buy puts for them to go down. So if everyone is going to be complaining in the rest of the world and not liking what the government is doing, and this thing goes all the way off the fiscal cliff and or goes into a severe correction, once again, the weekly over here is going to be the guide at this 50-week simple moving average. Now, granted that everyone's on their holiday break, we will deal with a half a trading day on Friday tomorrow morning. So far, the weekly volatility has been 31 handles from the bottom up in the S&P move. The prior week, we had 45 points in the S&P 500. We will be selling into resistances. We will be using various different risk management tools to make sure that if this thing goes the other way, this is our second correction of 2012. 2012 had some very good bull run rallies, but now we're into the bear side of things. So therefore, if all of this goes the other way, then we are going to get paid and make a fortune. So while everyone is complaining and moaning and groaning about the United States government, our cash register will be going much higher in value. We'll be ringing that cash register. We'll make sure we're on the right side of the trade should things go that way. Right now, you get relief rallies before you can make lower lows. If we go into a weekly sell signal, things can get very nasty on the S&P 500. The 100-week moving average is at 1318 on the index. That's this line right there. 1320, I've always talked about it. We never quite made it there on the last pass, but on this weekly chart on the S&P 500, we can clearly see that this was a year ago around Thanksgiving. We were putting in bottoms, and like I said, we got the great bull run here with that correction. This was a mid-year correction, and this was that summer rally that started in June that we took all the way up. Made 5.5-year highs with reversals. Now we're going into a bear technical structure on the S&P 500. Sell into resistances. Learn how to apply the risk management needed. Understand that the first quarter of 2013 and the second quarter of 2013 on the fundamental side or the earnings side in corporate America is also going to have their fiscal cliff to deal with. That means that earnings contractions are going to come into play. Therefore, between now and the year end, we will continue to buy at support and oversold conditions, and then we will sell up at the upper end of resistance levels. We will be using this very put and call structure right here. Okay, these are monthly put options on the S&P 500. Total volume traded on Friday was 10,000 of these contracts at the 1350. They were buying fairly big yesterday on the intraday level. The total open interest in these contracts, 152,000 open interest at 1350, 1375 you got 97,000 contracts, 27,000 of the 1390s. Once again, it's about getting these at the very cheapest level. So just let me show you and give you an idea of what I'm talking about. A 1390 put on the S&P, I'm just going to show you the weekly chart on it. They were up here at $55 a contract. They've come down $30 a contract. We will be looking at buying these. If we go up and test resistance, we're going to take a look at how we can get this contract when it was way up here at $55. It made a great move off of these bottoms. And these contracts were very, very, very cheap. You bought these for $3 or $4 and sold them up here at $50. You made a fortune when the S&P had that correction, when the election started. Right now, they're going to pull back. We will look at making this transaction because, once again, we're at the major wall of resistance on the S&P 500, close at 1391. This is a Thanksgiving risk management trade that pays lots of money. It's already paid once. It's going to pull back. We're going to look at how to get in there again, and we will, and it will pay. Now, once again, 1391 was a close. That was a 1390 put strike price. Here is the weekly. Things go bad between now and year end. And once again, Congress is in recession, meaning that they're not doing anything. And everyone is pent up to get some sort of resolution. 90% of the people think that they're going to do something about the fiscal cliff. Well, listen, whether they do or not, if they do not, then I can just tell you that from that very bottom there to right here, to this diagonal trend line. This low that happened on 10/2 of last year when we were putting in lows, and then the great bull rally of 2012, 5.5 year highs on the S&P, hits our target 1475, made a fortune on that short side. 10-week is about to cross over the 20-week. The 50-week is the first passive support. We were deeply short-term oversold on the daily charts. We're back above the 200-day simple moving average there. Once again, we do wish you a very, very happy Thanksgiving Day. This is your happy Thanksgiving update on the S&P 500. Once again, we will tell you that if everything goes bad again and we have a big reversal, there is a fortune to be made on the short side of the S&P 500. We are in play for it. We are telling you now on this very day. Tomorrow will be a half a day, and then we go into the following week, and therefore closing out the year. Now, we all know that November, December is supposed to be the two best months of Wall Street for the bull, but the bull is in a correction and going into a bear. So it's quite different than your normal seasonality. Rather, they can get the news out of the government to change it around. That's yet to be seen. We hit the weekly sell signal, we go a lot lower. And I can show you what happens when they hit weekly sell signals. It's called moving average convergence divergence. Look at that. Weekly sell signal, you go straight down. Right here. And this is what happens, and then we went straight up. And I will tell you that 2012 is going to probably be quite different. 2012 was quite different in a lot of respects. We won't go into that, but I will say that 2013 can be very, very ugly the way that this thing is setting up. And the thing about it is the S&P has a long ways to go. And to get back to these lows right here is about 1280 on the S&P. From an extreme bull rally 1, bull rally 2, bear reversal, bear reversal. The thing that we look for is that this second calendar year reversal 2012 is once we hit these resistance levels is we come back down, and we're going to see if we can break these lower lows, and if we do, we're going to break 1320 on the S&P. That brings us down to what we call a double bottom low right around that 1280 area on the S&P where these lows were right here. 1275, 1280. So they're still 100 points below this market right now as of the closing bell yesterday. Once again, enjoy your Thanksgiving. If you're looking for that 2013 guide, we're here. And you can sign up for our programs. We have many of them to choose from. Or you can send us an email. Once again, enjoy your Thanksgiving Day. S&P 500 is in bear territory.